Traders, hello, my name is Adam Harris and I am a chief market analyst, obviously trading my own capital, trading funds as well. And what I'm going to do here is for the next, let's call it 45 minutes, I am going to do some broad market analysis. I'm going to focus on gold, and then I'm going to talk to you a little bit about trader mindset. This should be relatively hot off the press, give or take 10 or 12 hours between when I'm recording this and when you're viewing it. My apologies, I can't do it live as I have prior engagements. Anyway, so let's have a quick look. The first thing I want to do here is I'm going to have a look at the dollar index. All right, so if we have a look at it, in fact, I'll tell you what I'm going to do. I'll go through to a single chart and let's have a look at this from a monthly perspective. So what do we have on the screen? We have a 10, 20, and 50. All right, so here we go, 10, 20, and 50. Simple moving averages, nothing too complex, and a MACD. All of them, default settings, nothing too complicated. I'm using the MACD as a momentum indicator, just looking for convergence or divergence. All right, so here's the big thing when we have a look at the dollar index right now. The big thing about it is that we had a breakout to the upside. The dollar attempted to break out to the upside, subsequently has moved to the other side of that and is very close. We've got a couple of days left, a couple of days literally, trying to decide if it wants to go back into the range or not. So you can see here it's a little bit of an indecision candle as well. If we go down to the weekly, having a look at it from a weekly, we pull back into the bottom of that range. We then produced a very strong sell-off, and currently it's trying to decide it's encountering some temporary, call it temporary support. Let's go to the daily where we can see that a little bit more clearly. And so it's really trying to decide what it's going to do. Okay, it went into an uptrend. This was a nice little bull flag. I beg your pardon, bear flag. We then broke down through that. Another market is pulling back up again. So there's a little bit of resistance around the $99 level. So what does it mean for the moment? We're waiting on a bit of clarity for this right now, but it should continue to head lower. And if it does ultimately follow through on that, in other words, if it just does an A, B, C, D, it should work its way down towards the $92 level. So that's kind of what we're expecting. We're expecting a weaker dollar at the moment. And so I'm seeing this more as shorter term bullishness. It's following through on everything else, should be doing that. But because it's so close to the edge of a range, it makes it a little bit more difficult to tell. Until it's really free and clear of that range, you've got both buyers and sellers in this area battling it out, especially as we get closer to the monthly candle closing. Because if you get a bullish monthly candle, it might want to work its way back into the range. And if it works its way back into the range, it might go to the other side. So we're looking for a little bit of clarity on the markets, and really, it's not, we might very well find that we still have resistance at $100 and that it simply wants to work its way down. So that is pretty much something that we're all looking for in the next couple of days. Let me show you this by, for example, showing you euro dollar. So euro dollar or GBP is a better example of this. GBP's done a really nice bull flag, broken up, coming back down towards the moving averages, coming back into the highs here. So this is what I'll be looking for. You guys will be closer to it when you're watching this. I'll be looking for a really nice bullish candle to form in this area. That's what I'm looking for. Nice green candle to form, and then to subsequently, that would be either Thursday or Friday, and then see the market breaking higher. So that's really something I'll be looking for. And again, on the 4 hour, for example, that might mean that we start to see a move to the upside. Okay, between now and when you're watching this, and maybe by the weekend. That's what I'll be having a look at as well. Okay, which would support the idea of a weaker dollar. So waiting for a sign here that the dollar is going to come in, test this area. GBP dollar is going to come in and test it, and then it's going to go the other way. And it'll be similar for like dollar Swissy. So dollar Swissy is coming back up, a little bit of support. We'll be looking to see if it puts in a lower high, breaks that low, continues down. It has also broken the low of this bear flag and is hinting at further downside. We look at dollar yen also finding some support here. So a lot of this is driven by, it's too much of a coincidence that every other currency pair suddenly hits a level of support. It's much more likely that it's driven by the dollar finding some resistance and being able to push off of that, or sorry, I beg pardon, support. If we go to the dollar, finding some support here, pushing back in. But it's about to hit resistance, and it's a big one. $100, it's a bit of a doozy, so we've got to see how it reacts to that. And I'm not presuming to think what it's definitely going to do. It has, a lot of its action lately has leaned bearish, but the fact that it's rebounding here, we're going to have to see how it plays out. Okay, that being said, let's have a quick look at the global markets as they are today. It's, we had a public holiday, bank holiday in the UK, and a national holiday in the US. So it's kind of, even though today, when I'm recording this, it's Wednesday, it's a little bit like it's kind of Tuesday. So it's still early part of the weekend because of the delay by the holidays. Right, so let's go down, let's have a quick look at, before we get to gold, let's just have a quick look at a couple of other things I want to show you. So the Dow. Okay, so the Dow here is attempting to find support where it is. We could see it possibly form a little bit of a head and shoulders pattern. What would that look like? left shoulder, head, right shoulder. If we break the lows here, we'll see it move to the downside. It's trying to stay above that. The S&P as well, putting back into the moving averages, trying to push and go a little bit higher. And so it isn't a little bit of a spot here, because if it does ultimately succeed in breaking through here, it's going to continue up. And there's a big battle here. There's both bulls out there that are saying, look, this is a V-shaped recovery. And therefore, if we go to a weekly level, if we go and look at this from a much higher time frame perspective, this is very similar. This is what happened during COVID. We recovered, which led to a bull run. We've got a V-shaped recovery here. This is what the bulls are saying, which could lead to a bull run. So they're saying that this and this is identical, and therefore a bull run from here is a possibility from a technical perspective. But the bears are saying, look, hold on a second. Over here, we dipped below the 50-period moving average. We came back up above it, and then we dipped below it, and we went into a bear market. So that was when Russia invaded Ukraine initially. That's when inflation was out of control, and that was when we entered a bear market. All right, so that's the bears are arguing that that's something that could still happen. If we fall back down below this 50-period moving average on the weekly time frame, then we're likely to return back into a much more bearish situation. So it is one of those, unfortunately, you're going to have to wait and see. And if it continues to trend higher, then it's a buying market. Whether you believe it or not, we could be in a bubble. And if we're in a bubble, hypothetically, the market will keep going higher even when it shouldn't. Even when it shouldn't, it'll just keep going high because it's a bubble, which means that bulls will be buying until that bubble bursts. All right, that being said, let's have a look at the NASDAQ. NASDAQ's also looking bullish even as we speak. If we go down to that daily time frame, we've pulled back in. All of this looks nice and bullish, but we've got to see if the market can follow through. And you can see the recent levels of resistance where we are. So we need to see a continuation of that. So I want you to keep that in mind because of that V-shaped thing, that if the market continues to break higher, it's more just money currently investing in a V-shaped recovery. That's happened in the past. They're just following through on that now. Same thing. It's that simple, at least. How's the FTSE doing? How's the UK doing? It's still operating near all-time highs, which is a good sign. How's the DAX doing? The DAX outside the US is the most bullish index in the world outside the US. It's doing incredibly well, continues to push higher. It battles a little bit here and there, but it's not taking hits. If you just compare the DAX over the last few months and you compare it to the NASDAQ, it has coped better than the NASDAQ. So if I switch this up to, say, a weekly chart, and we look, this is the NASDAQ. If you compare that to the DAX in Germany, much better. Like, it's stronger, rebounded faster, showing some signs of exhaustion here. Definitely showing signs of exhaustion and some divergence. So we could see it come down a little bit, but overall, much stronger than the US stuff, which is very interesting given all of the tensions that we're seeing right now. Last one before I move across to gold, let's have a look at Bitcoin. Bitcoin, in many ways, from a monthly perspective, is behaving incredibly well. The quality of this trend is just amazing. 50, 20, and 10 fanning out, looking good. MACD's trending higher. The price action, nice, healthy, letting off some buying pressure. Does it move up? Does a little bit of buying pressure. Nice bullish candle and moving averages and breaking higher. When I look at this in isolation, regardless of whether or not it's Bitcoin, it could be anything. To me, that is a relatively healthy trend. And I expect it to continue to attempt to push higher. So if we go now down to the daily again, you can see here that Bitcoin producing a bullish candle here is trying to decide if it's going to keep going or not. Okay, it's got a possible lower high. It's really if it breaks the low here, if it holds here, if we're going to see a bit of a correction. Again, even here, not seeing a little bit too much. The momentum looking a bit flat, but otherwise not terrible. But it is battling a lot with resistance at these levels now. So we're going to have to see how it copes with that key level of resistance there. Okay, so that being said, let's move across and let's have a look at gold. I want to have a look at silver as well because it looks pretty interesting there, but much messier. Actually, we can just do that now. If you kind of look at gold over the last few months and you compare that to silver, silver is just so much more choppy, much more violent, much more volatile. And therefore, I would avoid silver at all costs unless you see a good quality trend happening, but it's untradeable comparison to gold. Gold's just much better, much smoother. So again, the one thing I want to do here is go and have a look at the sort of longer term history of gold. This is it breaking through the $2,000 level and going on a tear. So this is pure bubble territory. Are we in a bubble with gold? Absolutely, we're in a bubble with gold. There's no doubt about it. This behavior has gone parabolic. It's doing very shallow retracements and just taking off, going pretty much straight up. 100% we're in a bubble. The question really is, how long will the bubble keep going for? Okay, will it keep going? Will it last another few months, or will it last another couple of years? We're seeing some exhaustion coming in here. We're seeing some exhaustion coming in on this one here, and we're seeing it. I wonder if I can just add in, what I'd like to do is just add in another gold chart for a second. Okay, so I wanted to start with this with just a much cleaner chart so that I can show you stuff. So when I got into the game 15, 16 years ago, this was actually when I experienced the very first gold bubble, which was over here. Okay, now at that point, gold had just broken through $1,000 an ounce, which psychologically is a really big thing historically. I think we need some context here, right? So we've broken through that. I got into the game about April, right? 2010. March, April, May here. By that time, we're above that, 1,100. Not really registering with me kind of what's happened, but within a couple of years, going up to 2011 over here, there's this mania around gold. So if you're not familiar, that term mania is the best way to describe when the market loses its mind, which can include, by the way, not just amateurs. It could include the seasoned professionals. They can do that as well. Or let's just put it this way. Seasoned professionals implies they've been around, but possibly people under professional employ is the way that I would put it. So gold goes into this bubble. At that point, social media is not the way it was. We didn't really have WhatsApp, didn't have everything else. This is 2011. But you had forums and YouTube. Everything is just like buy gold. It's never coming back down. It's never going to do that. And it goes into a bubble. And there's a particular distance that it moves. So we'll come back to this for now, but I want to measure the distance from the low of that period when it almost touched the 50 period to when it didn't. I'm just going to keep that on the side here. Then what happens is it almost touches $1,900 an ounce. Okay, touches $1,900 an ounce. It also finds a little bit of support here around about $1,600 an ounce, give or take, right there. And for a couple of years, goes a bit sideways, breaks down in 2013. Okay, 2013 breaks down and goes almost all the way, I might add, back to $1,000 an ounce, just like $50 shy of that. So that's an almost like, I want to say from a correction from this point, probably a 786, but doesn't matter. It comes back almost all the way back to $1,000 an ounce from going up to $1,900 an ounce. Gives almost all of it back. And it stays below, this is the key part, stays below this 1365 level until 2019. So let's just stop here and talk about this for a second. That was a bubble, okay? I remember that because I remember the absolute mania. I remember download my PDF, and this is why you need to hoard gold and silver, and everyone's selling it. Like cryptos are not even in the zeitgeist at this point. Everything is gold and silver. That's the thing, and everyone's losing their freaking minds over it. So you've got this, and absolutely a bubble. The interesting thing about it is it subsequently goes sideways. So everybody gets bored of it. Everyone just stops talking about it. Then it breaks down, and then you don't hear about gold until suddenly the last few years when it breaks out. So it stays below this for almost 9 years. Okay, from 2011, 2019, breaks up, starts working its way back up. Goes sideways for a couple more years, actually gets stuck in a bit of a range here before breaking out in 2024, March 2024. Okay, just over a year ago. And then it's been on a tear ever since. So first of all, it's important to understand that gold was in a bubble and that bubble burst. And if that can happen to gold, it can happen to anything. And you just don't hear about it because people forget about it. Goldfish memories. But it's in a bubble now. And part of the reason we know that is not just its overall behavior, but the fact is if I take the very same thing and measure it from that low, okay, we're well beyond that as a relative move to what happened before. We're well past that. So it's moved a lot further. The angle at it is very different as well. That was the prior angle. This is the angle now. So a lot further, a lot steeper, a lot more aggressive. There's no way this is a normal natural move. All right. But I would say this. When I kind of look at other things like the MACD here producing higher highs and higher highs here, the momentum of this is relatively healthy, so to speak. At some point, we normally expect it to correct. So normally what happens with parabolic moves is that when they burst, they tend to come back down quite aggressively. So if it's going to burst here, for example, we could see a relatively steep bring it back in line. We could see something like that happen. Could it come back down to $2,000 an ounce? Absolutely. Why not come back and test this major level here at $2,000 an ounce? Why not? It could come back and do that. Does it have to do it anytime soon? What would it look like? So what would it look like? Well, first of all, probably something similar. Probably a nice big red candle closing on the monthly, which means this is not something that's going to happen quickly. We're going to have a couple of months at least where we could see it actually starting to fail to go up. We're seeing some signs currently where it's showing a lot of wicks at the top. So it's battling here. So if I had to pick a level so far, it's battling around the 3,300 level. It's battling there. Could the trend remain intact? Could it do something like this? It could come back down here and then go even more extreme. Of course, those kind of things happen. But I think right now what we're looking at is like gold is, you know, definitely very popular. And we could eventually see it starting to come back a little bit. It could do a shallower retracement. Nothing wrong with it coming back down towards 3,000 and then taking another move up and then double topping or something like that. What I am saying though is that this has done a very extreme move. This is not normal. This doesn't happen very often. And we're starting to see some signs of it kind of slowing down. And an initial correction to me would be back down towards 3,000 or 2,800. What will happen then almost certainly is it'll probably try to buy again and take another move to the upside, and then we'll see if it can continue or if it fails. So if it fails, it would be something similar to this as well, where you'd have a move back, buyers come back in, try to push it up, fails again, buyers try again, fails again, buyers try last time, and then it just fails. That's the kind of thing that makes a lot of sense to have that kind of happen here. But also I'd be looking to see a very strong kind of bearish rejection candle, just a strong candle coming up to here, or possibly a big red one with a strong wick above that, something similar to this type of color or shape, something like that, and a strong rejection. That would be a relatively good sign. Where do I think in the long run, once the bubble burster could correct down to? I think 2,000 is feasible, quite far. Otherwise, we're talking probably somewhere, obviously above that, 2,500 to 3,000, somewhere in that area. So if you wanted to, you could change the trend line and go, okay, if you're into trend lines, if that's your thing, you could put it more like this. And if that's going to be the case, could come back down into this area. But I would love to see a correction down to 2,000 or 2,100. It's just such a great area of resistance that I could test it for support again. And so that is something I think we have to be cautious of. So that being said, let's go down to the weekly. So let's start to have a look at it from a weekly perspective. And there's a couple of things that we saw here. First of all, the market moved up. When I was expecting a bit of a correction, we didn't get that. It went sideways, consolidated, and then broke out. Consolidated, broke out. Then it does a wedge. So this is a wedge formation. Wedge, by the way, has got a 54%, it's almost 50-50, broke out to the upside and carried on. And now it's different. When I say it's different, you can see for yourself that this behavior, it's range bound here at the moment, range bound and sideways. So every time it breaks down, buyers are going to come in and push it back up because they're convinced that that's the lowest it's going to be for a while. But also people are selling up here at the top. So somebody's going to win, somebody's going to lose. Either eventually it's going to break down and then the buyers are going to realize this isn't going back up again. And then they're going to stop buying and the sellers are going to start coming in and it's going to push down. Or they're going to break through here. The sellers will stop selling, get kicked out, stop losses getting hit, whatever, the buyers will come back in and do it. In a way, we're kind of seeing a little bit of a possible wedge here as well. So again, this is a hypothetical, drawing this in, something like that, with another one that's going like this. Seeing something a little bit like that. It's not finished yet, but it just gives us something to kind of watch and keep an eye on. And again, that could potentially break to the downside. Gold is strong in many ways. It is producing a series of higher highs on the MACD, higher highs on price action. Just quickly going to step away from my desk. I want to check something. I've got workers in the garden. I just need to check something quickly. I'll be right back. Okay, so I'm back. All right, guys. So they might say goodbye to me when they leave now. So trading and investing are not the same thing. Okay, trading and investing are not the same thing. So we're looking at this. We're doing both. It's a little bit of a like having to do both things because we're trying to keep an eye on what's going on with the bigger picture as well as what's going on with the shorter picture. What I was going to say is periods like this when the market's moving are much easier to trade, whether you're a day trader or a swing trader. Just like whether you're trading on the lower time frames or whether you're trading on the higher time frames. All right. And at the moment, the market's incredibly choppy. So if we're going down to daily, you're going to see it's kind of, it actually almost looks a little bit like a possible bull flag. Let me just kind of do this, bring it up. Like we've got lower lows, lower highs. We could see a break to the upside. And I think for me right now, what I'm doing is watching to see if gold does do a move to the upside, a break up. And if it does that, it'll form an uptrend here and break the high and break this downward sloping trend line all in the same go, which means that it's going to attempt to make another move to the upside. So we're constantly looking at the difference of it from a sort of longer term period of kind of what's going to happen, but also shorter term. But I would say based off this and showing some of the wicks, we could be near the end of the bubble, possibly. Once the bubble bursts, it could possibly have a recovery, come back down, and then start to resume and head up a little bit higher. It's a possibility. Okay, so this is just what I'm looking for at the moment. We're effectively you could also say we're range bound, wicks up at the top, wicks at the bottom, going sideways a bit. And I'm watching to see if we do ultimately break out to the upside or if we start to break this low. Like if we break this low over here, that would be quite significant because then we're like breaking a structural low, so break of structure. For them, but what's interesting here, as I said, is we're getting fresh highs on price here, fresh highs on price here on the momentum indicator. So in many respects, the weekly doesn't look that bad at all. It doesn't look that parabolic. It doesn't look that overstretched. It's the monthly that looks a bit problematic. So we had it happen over here, basically, and over there, we had a consolidation. So gold took a breather and then did a move. And then it took a breather, then it did a move. Now it's taking a breather. This breather's bigger though. The range is bigger than over here. So this is a tougher battle because now what's happening is the way that it works is your institutions, your big money, hedge funds, pension funds, central banks, all kinds of things. They're not in and out of the market every day. It doesn't make sense because it's for such large amounts of money, it becomes costly to get in and out all the time. So they tend to hold their positions for longer. And as the money gets less, so in other words, when you go from billions down to hundreds of millions down to millions, then you might determine getting in and out a lot faster. Because remember, in order to get into the market, somebody's got to get out. And so it's just not feasible for big money to keep getting in and out very quickly. Shorter time frames make more sense when you're more of a retail trader or high net worth individual. And that means the daily. So a lot of these guys are moving in on the weekly and the monthly and not so much on the lower time frames. Just keeping that in mind. So at the moment, there's a lot of enthusiasm for it, but at some point it might just become a little bit too expensive. That's another thing as well. Who wants to buy gold when it's this expensive, when it's 3,300, when at some point it would hopefully correct down to 2,000? And a lot of people would then just buy more of it at that point. Okay, so just showing you this, just showing you where we are within the context of this, and what I would expect it to see is in order for this, I'd expect it to start trending. So it's got to change. It's got to go from the state sideways to starting to move. Same thing here, sideways and starting to move. And we're not really there at this exact point in time. We've got a nice move here in the past as an example. That's what I'm looking to see. So I want to see something like this starting to happen over here. We're not there just yet. I'd actually be looking to see something similar. So if I grab, when you look here, you can see the 50, the 20, and the 10 starting to fan out. Price is starting to behave in a very repetitive, structured way. That's beautiful. That's everything you want out of this. And that's what I need to see kind of in this area, if that's going to happen. Starting alternatively, if it fails to break up through that, starts to break down through the low, it immediately tells me that probably that monthly is starting to do that correction. So breaks to the downside imply more of the monthly weight pulling it down, whereas breaks to the upside are telling me that the daily and the weekly still have a bit of juice to the upside. They're not looking that bad. They're really not. It's just the monthly. But that monthly could go on for a while. So we're always at that threat of how much juice does the monthly still have? And honestly, it's in a bubble, which makes the amount of juice not normal. So it could just keep going. It could defy the logic. But it's showing signs of exhaustion. There's no doubt about it. So that means that if we did ultimately break down below this, below that 50 period moving average, then we would know what's going on. So let's go again and have a look at this. If you go look at the history of this, okay, we could see during this period over here, gold was underneath that 50 period moving average. Let's just say that I hide this temporarily, just so you can see the relationship of gold to the 50. Here it's largely underneath it, whereas here it's largely above it, sideways, but then above it again, sideways a bit, but then above it again, sideways on top of it, but then above it again. So it's largely mostly above it, and that's really what I'm looking for. We're still above it. If we start to drop below it, break below this low, and we're below the 50 period, then all the evidence is pointing to much more bearish sentiment. Because for some of you, you should always be looking at price. You should always be looking at the highs and the lows of price itself. Then you want to be looking at price's relationship into the moving averages, and then other indicators. So you should always start by looking at price itself, the structure, the highs, the lows, swing highs. Then the moving averages can give you an additional confirmation on top of that. So a break of this low, which is actually also support and resistance here, that would be significant if it breaks back below that. Okay, there's another one just here as well. So we've got a second one down here. So we'd be watching that. If we break below this, we're probably going to head down to 3,000. If we break below that, we're probably going to head a little bit further. Just gives you some, what we just need to do is map the lay of the land of gold so that we have an idea of the bigger picture. And then because the medium, the weekly and the daily do not to me look too bad, too overextended, not ridiculously anyway. I think that the real one is really we've got the weekly and the daily on one end, showing us more the short term, medium term, but they're both basically taking a break and they both want to keep going. And then you've got the higher time frame, which is the monthly, which is exhausted and we're going for a while, but if it's in a bubble, could still keep going. Okay, imagine someone's added tequila to the punch bowl. Okay, so still going to go. When did it go? I think it's interesting to talk about when it got into the bubble, when it was clear that it got into that. And interesting enough, I might have been behind the curve. It's possible for me I might have got it wrong. Over here, I was actually showing exhaustion. Now, what I thought would happen was it would be a breakout and a retest and a continuation. And it never did. It showed a lot of it pulling back here, attempting to do that, and then it just kept going, which was really kind of, okay, that's unusual. And then it did this part. So at this point, while the time we were going up here, I was like, okay, it's very, very bullish. And then it wobbled a bit here, and I thought, okay, if it breaks out, it's definitely in a bubble. So it was wondering if we're in a bubble, absolutely in a bubble. And since then, this is where we are. So there's a point at which the market it's just not taking decent corrections. So in other words, here it goes sideways. When it should do a pullback, it just goes. Here it should have done a bigger pullback because it's gone even further, and it just kept going. So there's a point at which you know that this market is just, but here you can finally see it struggling in that area. So that gives you a bit of a rundown for gold. And so what would I expect in the coming days? This is what I'm looking for. Don't forget, we're also going to be in June soon. And so we're looking for a break of this high or a higher low here. And a break of that would be a relatively good sign of bullishness. And if it does break through that, look, there's also some resistance in this area. All right. But if it gets past that, and if it starts breaking through that, what it does tell you is it wants to go higher. And if it gets past that, it's likely to keep going. And where would it keep going? Round numbers are probably the best. 3,600, 3,700, 3,800, and so on. Do I think it's going to go to 4,000 or 5,000 in the next few years? I can't tell you that. I can't. Sometimes I can say, look, it looks really nice and healthy, doesn't look overextended. And based off this, if it does another leg up, that's where it's going to go. But the point is now we're already very overextended. So I can only really tell you how well it's going to do after we have the correction. Because depending on how bad the correction is, then I can tell where the next likely phase is. I hope that makes sense. Okay. So also just getting you to watch this, because if you start to dip below this and back under the 50 period, then further downside kind of makes sense. And really, the only way that I would see that is letting some of that buying pressure off on the monthly. Got to keep an eye on that. Okay, so that being said, that is kind of the shorter term stuff for gold. Let's have a look at it on a lower time frame. So let's go to the 240 and see what's happening as we speak. So we've got possible head and shoulders forming here, meaning it could be getting ready to do a break and a move down. And all that means is it would do move down to here. So you'd have a move, you'd have a move down to here, straightforward, and then it might just find supports and just go back up again. So this looks like it might be getting ready for a shorter term correction. I was actually looking for a correction down towards 3,000 a while ago. I was looking for this to come back down. Actually, sorry, where was it? More the monthly, and waiting for it to come back down to, just back down to this area, which puts us around the 3,000. As it comes down to 3,000, the moving averages will come up to meet it. That's what I was looking for. And now you can see why there's so many drawings on top of it, because I'm doing analysis on multiple time frames. And you've got to do that, unfortunately. We ideally, we've always got the bigger picture, and we always have to be aware of where we are within the bigger cycles. Cool. So I think that gives you a very good picture of gold with regards to that. So shorter term, day traders are looking for much more shorter term moves. Excuse me, they might just be down here and then look to see if it wants to keep going. Wants to go up. Here was a very nice ascending triangle and a breakout, and it did another move to the upside, and now it's potentially doing lower highs and lower lows. And if it breaks through support here, we're going to see a correction to the downside. So Shorter term stuff really makes sense, but I would say to you that, yeah, if we break up through this downward sloping trend line, break above this high, then the daily starts to look a little bit more bullish. Then you can see what it's trying to do, where it's trying to go. So really the approach would be, if you're not getting very clear, strong signals and the market direction is not very obvious to you, then just sit it out. Okay. From an investing perspective, would I buy gold now? Honestly, it's a tough one. I want to say no. I want to say it's very overpriced. It is in a bubble. But if I did buy it, and again, I'm not your financial advisor and we can't really just do this stuff from a regulatory perspective. Can't do that. So this is just discourse. We're just having a cup of coffee and I'm just talking out loud. If I did put money into gold, I'd be very careful because I'd have to accept the reality that it could be at the top of the bubble and the bubble could burst and it could come down to $2,000. So in situations like that, I'm inclined to put less money into it. If I was going to, if somebody stuck a gun to my head and said make a decision or buy some, I would, but it wouldn't be a huge amount. And even with that in place, I would accept the reality that I could be buying at the very top of the bubble. And then you have to have a long-term approach to it, like 5 years approach to it. But again, be aware that for almost 9 years, gold just went into a hole. And there were people that bought at the top and sold at the bottom because they needed the money. So imagine like 8 years later, you're like, I put 20 grand into gold, I need 10 grand, which is now probably what it's all that's worth. And they're like, I need this money. So they took it out and then gold took off after they went to all-time highs. That's what happens. So it would have been a different case if they had not put all their money into gold. So when it's like this, putting a lot of money into it, that you've got to think in terms of what you can afford to sit without for 10 years, is my opinion. There's other ways to make more money. There's other things out there, other stocks, various other things. What I would say is that I'm seeing something unusual. I'm seeing Bitcoin specifically, not cryptos, but Bitcoin is getting a lot of institutional money going into it, similar to gold. It could be because we're still in the early stages of cryptos. We still are. It's not adopted in every country. It's not adopted equally. We've got quantum computing coming up with AI, which means that breaking cryptography, breaking like crypto chain, blockchain technology could become easy. I'm not saying it will. I'm saying that it's a possibility, and that would basically just wipe out cryptos. Okay, they go from something to nothing. As Rick and Morty says, it would become from a binary thing, going from a value of 1 to a value of nothing. So we need to keep that in mind as well. We haven't quite got through that just yet. But I am saying that Bitcoin is behaving much more rationally. It's trending very well. There could be something there in the coming years. Okay, and we are definitely in uncertain times, for sure. So that brings us up to kind of where we are with regards to gold. And so one of the things that I would talk about now is to kind of talk to you a little bit more about trader mindset, okay? Because I said I was going to do that. And so the very first thing that I want to do here is first of all, I want to kind of make a few things clear. The better your technical skills, the better your skills are at analyzing the market, the less you generally, it's a generalization, will need to rely on trader mindset. The better your skills, okay? So let's just say that you're an athlete. The better your skills are in the game of the sport that you are as an athlete, the less you need really in terms of trader mindset. I'm not saying you don't need it at all. I'm saying that you don't need it as much. So when your skills are a bit wobbly, then your experiences are a bit wobbly, which means you now have bad experiences to work your way through to keep you calm, because you need to be calm if you're trading. So I'm going to just emphasize this. If your skills are weak, you are going to need more trader psychology or trader mindset, and you need to improve your skills. There's no way around it. You can't get where you want to go without improving your skills. So that means you're going to have to improve your technical analysis skills. And at the end of the day, there are only 3 things that ultimately you need on your chart. All the other stuff is just sprinkles on top. But there are 3 things that you can't get around. Okay, support resistance levels and candlesticks and market conditions. Okay, so this is nice trending market conditions. This is just noise. So it's either moving or not moving. And so you could trade them. When they're moving, it's very easy to trade because trends require effort. All right, ranges don't. So they're not the same. They might be gold trending or gold ranging, but it's not the same. It's not the same people involved. It's not the same mindset. It's not the same actions taking place under the hood in the mechanics of it. It's very different. So key price levels, because once it breaks your key price level, we know where it's going next. That's all it does, is go from one price level to another. And that's actually where fundamental analysis and technical analysis are two sides of the same coin. Okay. Some people don't think so. They think they're different, but they're not really. If you're looking at the spreadsheet of a company or its balance sheet, or you're looking at its profits and losses or its assets and liabilities, and you're looking at over a period of time, 2 years or 5 years, somebody might say to you, listen, can you take the profits, monthly profits, and plot those into a bar chart for me, for example? And then it becomes a visual version of numbers. But the difference is that when you look at the visual version, sometimes you can see patterns that show themselves that are obvious when you're looking at the information from a different perspective. So it's the same information. You might have a fundamental analyst saying, I think gold is cheap at this price. And the technicals might be going, look, it's very bullish at this price. So it'll be giving you the same stuff. The beauty of technical analysis is that what you see here, the market's not capable of deception. What you see here are the physical orders going through to the markets. So if this is looking bearish, that's because people are selling. There's no way around that. There's no way around that. Those are the actual orders going through. So it's not some article on CNBC or something on Bloomberg or something on investing.com where it's just saying JP Morgan says gold's going to go to such and such level. And if you're not seeing it in the charts, it's not happening. Okay. So that's something to keep in mind. Now, so I'm talking about trader mindset here because I was saying that your technical analysis skills have to be passable. They have to be. You've got to be able to look at a chart and agree on what you're looking at. If you can't agree, and this is the thing, if you took 10 or 100 professional experienced traders, they should all be able to look at a chart. I'll grab something. So I'll grab something that doesn't have any marks on it. So we'll just try and look at something brand new. I'll try and find something brand new. Or I can look at this now. Doesn't matter what I'm looking at, but if you show this to 100 traders, all of them should be able to say to you that there's no trend here. They should go, it's range bound. They might go, look, it's a little bit of an uptrend, but it's within a range. There shouldn't be anyone else who goes, well, it's a downtrend, it's all over. No, not at all. The difference is that there might be someone who says, look, you know, I might buy here, I might sell here. So somebody else might say, I'm not even going to engage in this market. But everyone should agree on what the market conditions are that they're looking at. And if they don't, then somebody's wrong because the market's only going up, down, or sideways, and it's doing that. So what is it? Got to keep an eye on that. And so you need to be aware of that, your technical skills. You need to understand that not all conditions are tradable. If the market's ranging, it's got lower volume, less participation. Problem is no one's in control. So whether you are a buyer or seller, who knows? You could be on the side, losing side or winning side. It's all over the place. It becomes a lot more random then. When the market's moving and it's trending, then it's attractive professional traders. Then it tends to adopt more market structure, becomes more predictable, and your probabilities of winning if you trade in the direction of that market actually improve. And so if that improves, your confidence improves because you understand why you're taking the trade. It actually makes sense to you. So once it makes sense to you, but you've also allowed for the possibility that the market is, you can never predict it all the time with certainty. Once you accept that actually, generally speaking, if you trade an uptrend, it'll trend higher. If you're trading a downtrend, it'll trend lower, but it's not guaranteed. What happens is that most of the time the market actually behaves the way you expect. And when that happens, your brain is much more in connection with the market. And so its behavior is less surprising to you and the outcomes are less surprising to you. And when they're less surprising to you, you don't need as much trader mindset to help you deal with trying to deal with expectations. Whereas if you don't know what you're doing and you don't know why you're taking a trade and then it becomes a losing trade, you don't even necessarily know why you lost. And if it's a winning trade, you don't even necessarily know why you won. And so if you are not sure what it takes, how will you know when you have become a consistently profitable trader? You'll know that, when you know why you're taking a trade. So when you understand why you are taking a trade, then it will make sense to you. And when it makes sense to you, then you just don't need as much trader mindset stuff. Now, all of that being said, we have relationships with money. We all have relationships with money. We have self-worth issues. We have a dark side to us, right? So we have a side to us which is toxic, potentially. We have emotional nerves that can get hit. We have all kinds of things. Everybody does. I've never met anyone that doesn't have it. Nobody's bulletproof. And nobody's perfect, except my fiance and my dogs. But that aside, nobody's perfect. And so when the market conditions become hard for us to trade, and we can't really understand why we're having more losses than we normally do, which has been the case, by the way. If you've started trading in the last 3 months, you've probably had a bucket load of losing trades because the markets have just been insane. But if you've been trading for several years, you'd have experienced the same over the last few months, but at least you'd know that it's not normal. You'd be able to come away and recognize that. So you'd adjust, you'd stop trading, or you'd reduce your risk. But if you're a beginner and you were just getting started and you just want to get trades under your belt and take trades, you'd be more convinced than ever that you can't make money doing this, which isn't the case. The stock markets have been doing relatively well. So we'll go ahead and have a look at some stocks as an example. Markets are not always the same. So you've got Forex, you've got stocks, German stocks. Let's have a look. This is SAP. So let's go ahead. Let's look at this from like a weekly perspective. Okay, trending relatively well. Let's bring these things back now. Trending relatively well for the most part. What about Siemens? So how's that looking at the moment? We've kind of bounced back to this one. Let's see if we're getting any kind of nicer trends on the daily. Not really. This could be a potential bull flag again. Let's have a look at, what's this one? DBK, Deutsche Bank, trending relatively well. Okay. Adidas, trending to the upside now. Okay. Very messy over here, but now really trying to move to the upside. What about Buffett stuff? So going into Buffett's companies, let's have a look. How's Apple doing? So Apple's sideways at the moment. Okay, ping-ponging, purely range-bound. Okay, so what's it going to do? Is it going to break down or is it going to break up? We'll have to see. What about, this is Amex. Amex is doing incredibly well. So it's got a very nice pullback. It's gone from a downtrend into an uptrend. That's what it's doing. So I should be buying. This is Coca-Cola. It's garbage. You can't trade this right now. Not right now. In fact, this actually has a name. It's a diamond formation. It's going up here and down there and down here and up there. It's a diamond formation. What about this one? Citi. Okay, so this is Citigroup. Breaking above the highs here, pulling back. Looks like it wants to keep going. Visa. Also, very, very bullish at the moment. Wants to keep pushing up. Okay, MasterCard. Also, very bullish at the moment. Amazon. Pushing up quite a bit. So a lot of the markets are looking relatively bullish at the moment. Not necessarily everything. What about Alibaba? Excuse me. Alibaba. Okay, not looking as strong. You want to get some perspective. You can hear it's in an uptrend on the monthly, sitting at a key level here, so it's got to make a decision. So my point is this, guys, is that when you engage in a chart, you should know why you're doing that. You've really got to have a reason as to why you would possibly engage in that market. And it has to make sense to you. And if you don't know why you're getting in, if you've just been given a strategy and you don't understand the strategy, you need to understand the strategy. That's improving your technical skills. Excuse me. And all of those things will give you more confidence and help you deal with stuff. Everybody struggles with the losses. But when you don't understand why you're losing or winning, why the trade was a good trade setup, why it was a weak trade setup, when you don't and that's technical. No amount of trader mindset is going to help you work out whether a trade was a good setup or not. You've got to know the strategy. You've got to know which conditions help your strategy the most. So once you do that, you will find the trader mindset becomes a smaller portion. It never goes away. It's important. But then you also have to talk about your relationship with money. I've got about 90 seconds left. I want to wrap this up in 45 minutes. But you have to understand that if you do certain things, then your psychology becomes less of a thing you have to work your way through. Tiger Woods, playing incredibly well. Then he has this scandal that hits. But now he feels shame. All of a sudden he's in the limelight for all the wrong reasons. And it impacts his game. But eventually then he managed to work through it. And he hadn't lost the technical skills, but he had the yips. He just had to get rid of that. It was starting to override. And that can happen with us. That's exactly what can happen with you. So you need to be able to understand the weather conditions, the market conditions, why you're trading, how your strategy works. Then you'll find that actually the only time you really need to engage in your trader mindset is really for one of two things. Find out why, what's going, how you feel about your losing trades. Make sure you're keeping yourself more patience than anything else. Patience to wait for trade setups, patience not to risk more than you should, patience to close out your trades, take partial profits. But then you've also got a relationship with money. That's the thing I want to leave you with for now. Think about how much money you feel you deserve. Because I had a ceiling when I got my really, really, very, very first big paycheck out of trading. It was huge. It was a leapfrog. And I then realized I had to do like, oh my God, I don't know if I can handle dealing with this kind of money. It was bizarre. It was almost like a bit of self-sabotage. Like I don't, like a poverty mindset, or I'm always going to be poor. What do I do now? And I had to work on that. I had to break through that because that was there. And everybody has some kind of a money blueprint. I want you to think about that. How much money you feel you deserve. Because in order to do this, you have to be okay with money. You have to be okay with taking money from the markets. If you have a problem with that, if you feel bad about taking money, that's going to be something you're going to have to deal with. So self-worth, self-confidence, relationship with money, all those things, plus people in your life who are possibly toxic, who aren't good for you. You need to surround yourself with people who achieve things, either traders or not even traders, but people who think that increasing your wealth and doing all those kinds of things is very normal and natural, because you need to, by osmosis and exposure to them, you need to adopt that mindset. I could talk about that for much longer, but I think I've done enough and we've kept it long enough. We're heading on 46 minutes now. I hope that you found this instructive and useful. You can find me on my YouTube channel, okay? London City Trader, or Adam Harris, London City Trader on YouTube. You can find me there, and I look forward to seeing you in future. So wishing you all the best. Thank you.